It may seem boring during the crab market, but as is often the case, there has been a lot going on behind the scenes. And along those lines, there have been a couple big developments that, while making headlines, I don't think they are quite yet anyway, really truly appreciated for just how much impact they will eventually have on Bitcoin. Prepping for this show is a week-long process, but things happen fast, and so often the things I plan to talk about get completely upstaged, or at least rearranged sometime during the final prep work I'm doing for the show, often just in the hour prior to hitting record. Today, of course, is no different, and we have a lot to talk about. But before I get into it, I want to point out one thing. You may or may not know that the world completely changed last Friday. If you were not aware, singer, songwriter, actor, poet, and pirate Jimmy Buffett passed away last Friday. He had been sick for a while, apparently, and kind of kept it a secret. It isn't a secret to a lot of you that he had a major influence on my life. He's probably a big portion of the reason why I transitioned from desert rat to beach bum. And you would think he'd be almost as big of a figure in Florida as Mickey Mouse is. You know, Disney being such a central part of Central Florida. But, despite the fact he is extraordinarily popular in Florida, I still run into people from time to time when you mention him, at least prior to this week when he was in the news, and when you mentioned Jimmy Buffett. And even this one surfer that I was talking to on the beach years ago, I forget how the conversation came up, but I mentioned Jimmy Buffett, and they said, "Oh, you mean that Mother Ocean guy?" He's not really my style, and so maybe you don't even know who he is, or maybe you just know him as that Margaritaville guy. But he was a big part of my life. He wrote several of my favorite books. If you've never read any of Jimmy Buffett's books, Tales from Margaritaville is probably my favorite. It's easiest to read because it's a series of short stories. And if you like his style, then Tales from Margaritaville, one of the stories in it is kind of expanded on by another book of his called A Salty Piece of Land. And Where's Joe Merchant, another fantastic book. So he was a singer, a songwriter, generally just a really good guy. And he left us a little too soon. Surprisingly, somehow before Keith Richards. So go figure. But hey, this is a Bitcoin podcast, and so let's get into it. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Hello, Sat Stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. As usual, I am Chris, and today is Wednesday, September 6th, 2023. As I mentioned, we have a lot to talk about. And of course, today is also DCA Wednesday, so we've got to grow that stack together. And it looks like we're going to get a pretty darn good deal on those Satoshis. Before we get into all of the above, let's take a quick look at the vital statistics. Again, today is Wednesday, September 6th, 2023. And at the time of this recording, we find ourselves at a block height of 806,525. And Bitcoin is currently worth $25,740 US. That works out to 3,885 sats per dollar, which is about the cheapest we have seen it in a while. Bitcoin, if you zoom out, pretty much is going sideways. I mean, it bumped up to, I think the highest we paid for it was a little over 30,000. But, if you were following the price religiously, by the minute, it got up, significantly higher than that. But in general, Bitcoin's doing what Bitcoin does. Bitcoin, if you remember the 210,000 block theory, if you follow the 4-year cycle theory, I've mentioned routinely that we're repeating 2019. And if you follow the charts and you look at a chart of 2019 overlaid over today, Bitcoin's behaving eerily similar. I mean, almost exactly the same way as it did at this point in the previous cycle. Now, there was a huge black swan event that came up right before the halving. The halving was, in the spring of 2020, and we all know what happened in March of 2020, right? So, that was the sort of once in a lifetime black swan event that hopefully we'll never see again as far as shutting down global economies. Obviously, that impacted everything, including the price of Bitcoin, which at the time was, I think, somewhere around $10,000 and tanked all the way down to the $3,000 range. So, if something like that happens again, that would be the equivalent of seeing Bitcoin go back down to maybe $15,000 and then work its way back up as we approach the halving. And then, I digress. Back to the vital statistics, which is what I was talking about. We're currently at we just were at block 806,525. Looks like we found one block since then. But assuming we were still at block 806,525, that would put us 33,475 blocks away from that next halving, another 1,000 blocks closer than we were just last week. And it looks like that forecast date has slipped another day. Clark Moody's dashboard is showing that the anticipated date of the next halving will be April 22nd of 2024. As you know, all that really matters is that the halving will occur at block 840,000, and nobody really knows when that will occur because that depends on how fast blocks come in between now and then. And they've been slowing down, so the estimated date is pushed out to April, almost said August, April 22nd of 2024. But TikTok next block, it's going to happen sooner or later. And when it does, that is the traditional start of the next cycle, the next Bitcoin epic, the next halving epic. And, if history repeats or even rhymes, 6 months after the halving, we should be retaking or eclipsing the previous all-time high and going on to the new euphoric phase, the new blow-off all-time high before, the cycle repeats and we retrace a little bit. So, nobody has a crystal ball, and eventually the 4-year halving cycle will probably cease. But, there's some solid economic reasons why that happens, supply and demand chiefly among them, since the halving basically means the supply of Bitcoin available on the market is cut in half. And the reason for that is the vast majority of the Bitcoin being sold in general is being sold by commercial companies that are mining Bitcoin for profit, that have to sell Bitcoin to pay their rent, their bills, their employees, their electricity that it costs to mine the Bitcoin, etc. And when that gets cut in half, it just logic, even if you're not an economist, would dictate that the price is going to go up. But we shall see. Bitcoin's current price gives it a total valuation, a market capitalization of $501.4 billion, down $30 billion since last week. But only $14 billion from 2 weeks ago. Like I said, if you zoom out, these changes aren't quite as dramatic as they might appear if you're staring at your screens and checking that price, hitting refresh minute by minute. That is still the lowest market capitalization that we've seen since March 15th of this year, when that DCA Wednesday episode, Bitcoin had a market cap of $472.5 billion. But by no means the lowest that we've seen even this cycle. If you remember when Bitcoin was down around, in the teens, it dipped as low as 15,000 or so, but it was only there for seconds. So in general, I think the real low for the cycle, as far as you're having been able to reach out and snag some sats, unless you had a limit order all ready to go and got lucky, would have been closer to 16 or 17,000. And at that time, Bitcoin had a market cap of around 317 billion. So, significantly less than where we currently sit. Again, none of this really matters. All that really matters, to me at least, is that we're going to be able to grab sats cheaper than we did last week and stack as many sats as possible before that halving happens. Because if history repeats, shortly after the halving, your window to stack those sats is going to, it's going to start narrowing. It's going to start closing, because you can stack a lot more sats when Bitcoin's only 25,000 than you can when it's over 100,000 or 200,000 or a million, or whoever knows what the price shoots up to this next cycle. For those of you who value your wealth in shiny metal rocks, it will currently cost you 13.5 ounces of gold to purchase just one Bitcoin. That's a little cheaper than last week. So if you are one of those gold bugs that thinks you missed out, or that you're not quite sure whether you're ready to get into Bitcoin, you can get in a little bit cheaper than you could last week. As far as your gold stash is concerned. But mark my words, it will not be long before you're talking about Bitcoin in terms of pounds of gold, not ounces. So if you're a gold bug and you still haven't gotten off zero, tick tock, man. Your window of opportunity is closing just like everybody else's. For those of you who value your wealth in pizza, one Bitcoin will currently purchase you 1,446 large pepperoni pizzas from Papa John's. And that is still one large pepperoni pizza every day for almost 4 years for just one Bitcoin. Obviously, a heck of a lot more pizza than Laszlo got on that very first Bitcoin pizza day. And looking at the mempool, there are currently 64 blocks worth of transactions pending, at least in Clark Moody's mempool. That is a significant increase from last week when there were only 46 blocks worth of transactions pending in the mempool. So a lot more on-chain activity during the last week than we had seen for a while. The last time we saw more than 60 blocks pending in the mempool was back on July 5th. So, more than a month ago, although not the highest we've seen. So, it got really crazy during the height of the ordinals and inscriptions thing, but still a heavy amount of transactions pending in the mempool. And accordingly, Clark Moody's fee estimator is recommending that if you want to guarantee that your on-chain transaction is included in the next block, it's going to cost you a fee of 25 sats per VByte. That is 9 sats per VByte more than last week, so a significant increase. Although his dashboard is saying that if you have a day to wait, that you can still possibly get that transaction included for as low as 9 sats per VByte. Of course, that's subject to change. And if you are making on-chain transactions, you should definitely consider using replace by fee so that you can bump that fee if the transaction is not getting mined fast enough for your purposes. Mempool.space is telling a similar story, slightly cheaper. Their fee estimator is recommending a high priority transaction should have a fee of 21 sats per VByte, so 4 sats cheaper. And that only works out to still, well, at the current prices, that's 76 cents, so less than a US dollar to have, your transaction recorded on the blockchain indelibly, permanently, and permissionlessly, anywhere in the world, which is still pretty darn cheap considering, that it's not even possible to send money to other places, to some places in the world. And even those places where you can go wire money or go to Western Union and send money, certainly going to cost you a lot more than 76 cents. So while the fees are a little more expensive than they had been, they're still a lot more affordable than during the block wars, for example, the block size wars, the hash wars, when fees really got jacked through the roof and it could cost you $5 or $10 to send a Bitcoin transaction, even when Bitcoin was worth significantly less in US dollar terms than it currently is. And speaking of on-chain activity, that statistic that has been my favorite statistic to follow the entire history of this podcast, Bitcoin's 24-hour transaction rate, that is up significantly. It's currently looking like Bitcoin is handling 5.75 transactions per second, a full transaction per second faster than last Wednesday. And, 1 transaction per second might not seem a lot, but, that's a 25% increase in transaction volume. So that's a pretty significant increase in on-chain activity. And obviously that's reflected in those block fees. And since the last Bitcoin Bulletin podcast, it has gotten a little easier to mine a block of Bitcoin. We had a negative difficulty adjustment, a downward difficulty adjustment of minus 2.6%. If you're not familiar, Bitcoin adjusts the difficulty required to find the next block every 2016 blocks, which is theoretically every 2 weeks, when blocks are being found faster than, once every 10 minutes. So more frequently than approximately 2 weeks, the difficulty gets increased to slow it down because, Bitcoin's aiming to have, blocks come in on average of 1 block every 10 minutes. They were coming in at 10 minutes and 36 seconds on average when we did the last episode. That is obviously slower, and therefore we had a difficulty decrease. We are approximately 1,891 blocks away from the next mining difficulty adjustment. So that is, that's looking like that's going to be 2 Wednesdays from today. on September 20th, so approximately 2 weeks. And even with the difficulty decrease, blocks are coming in even slower than they were during the last epoch. They're averaging currently 10 minutes and 37 seconds between blocks. So, obviously it's too soon to tell because we just had the difficulty adjustment, and, it's an average of 2016 blocks. So since we barely have any data to work with, less than 200 blocks, the estimates are all over the place. For example, one site says that we're looking at a decrease of 1.41%, and another one says it could be as much as 5.6% of a decrease in the difficulty to mine the next block. So it's too soon to tell, but one thing's for sure, if blocks are still averaging 10 minutes and 37 seconds, there will be another decrease, which is good news for those of you who are mining at home or work for a commercial miner and you're trying to find as many blocks as you can before that halving, when that miner reward gets cut in half. But in general, it's just Bitcoin being Bitcoin. I was watching blocks come in the other night while I was listening to podcasts, and they were all over the place. Sometimes they'd come in at 2 blocks within a minute, and other times there was like a 45 or a 50-minute block time out there, and that is not unusual. Mining blocks is random chance, basically. I mean, miners are crunching numbers, right? Trying to find a nonce, and that works out to basically like flipping a quarter, and you get either heads or tails, except for they're flipping trillions of quarters a second. And if you flip a coin 5 times, it's possible to get heads 5 times in a row. But if you flip that coin 2016 times in a row, then you should get approximately 1,008 heads and 1,008 tails. And so it is with Bitcoin mining. Those blocks should average 10 minutes, and they're currently not. But that's the beauty of the Bitcoin difficulty adjustment. That's part of the reason why the FUD that will intensify as we get closer to the halving, because it always does. The miner FUD. Why that's nonsense? Because there's a mining difficulty adjustment, and if it gets too difficult or not profitable enough to mine Bitcoin and miners start shutting down, well, then it'll just get easier to mine Bitcoin for the miners who didn't shut down, and life goes on. TikTok next block. Real quick, I want to thank those of you who are listening to this podcast on your favorite podcasting 2.0 app, such as Fountain. We do have one more boost. Leggy sent us 5,000 sats, and he kept it simple this time, simply saying thanks. Thank you, Leggy. It is great to see that you're out there listening and that you continue to support the podcast with those boosts. We also had an on-chain contribution. Someone tipped the podcast 27,000 sats, actually more than 27,000 sats. They did it online at that Base32 address that is included in the show notes, and I have no idea who that was. I don't have a DM or an email indicating who it was. So thank you, Anon, that tipped us 27,000 sats on chain as well. As you know, Podcasting 2.0 lets you support your favorite podcast by sending boosts, basically, which is essentially tipping the podcast with a lightning message. So you can, say thank you or give a shout out to your favorite podcast. They'll also let you stream sats on a minute per minute basis. So, for example, if you feel like you're getting 2 sats per minute worth of value out of listening to your favorite podcast, you can configure your Fountain app or your favorite Podcast 2.0 app to stream whatever you set. 1 sat, 10 sats, 2 sats per minute. But most popular on this podcast, and most of the podcasts I listen to, tends to be the boost, and that's because, it's a message. It lets you do a shout out and support your favorite podcast. So thank you once again, Leggy, for that boost. And thank you to all of you who are listening on whatever app you choose. And if you aren't listening on Podcast 2.0, if you're listening on Apple Podcasts, wherever you're listening, thank you. But one way you can help support the podcast without sending any sats or any other type of contribution is you can simply subscribe, or rate and review the podcast. Obviously, that varies from platform to platform, but regardless of how you're listening, if you take a moment to do a review, or subscribe, or whatever the option is for you on your platform, that helps feed that algorithm monster, and that helps more people find out about the podcast. And growing the podcast, growing the number of listeners subscribing to the podcast, not only does that help orange pill someone who might not yet be orange pilled, it helps support the podcast as well. So thank you to all of you listening from wherever you're listening. And that geographic distribution has not changed at all. The top 10 countries for listenership remain as follows. Number 1 is still the United States. So thank you to everybody listening from right here in the USA. Number 2, as always, remains Argentina. So muchas gracias, amigos, for keeping Argentina number 2 in the listenership rankings. Number 3 remains Germany. So Dankeschön, mein Freunds in Deutschland. Number 4 remains Luxembourg. Again, Danke or Morien to those of you listening in Luxembourg. Number 5 remains Canada. So thank you to everybody north of the United States in our 51st state, the Great White North. Thank you for your listenership. Number 6 remains Spain. So muchas gracias, amigos, in España. Number 7 remains Venezuela. Muchas gracias, amigos. Number 8 remains Colombia. Muchas gracias. Number 9 remains Sweden. So thank you to those of you in Sweden, although nobody has reached out to me to tell me how to say hello or thank you or whatever customary greeting is appropriate for those of you listening in Sweden. Number 10 remains Singapore. Again, nobody's reached out from Singapore, but I know you're there because you're still the number 9 and 10 countries as far as the distribution of listeners go. And lurking down at number 11 remains Mexico. The one change I have noticed is a little bit further down the rankings. Australia is starting to move back up. So if you're listening from Australia, thank you for tuning in. If you grab a mate to help listen, maybe you can boost Australia back into the top 10. That would be really cool. But I digress. Thank you to all of you, regardless of where you're listening from. It's just really cool to see the top 10 and visualize just how international our audience is. And that's really awesome. So thank you from the bottom of my heart, wherever you may be. On to the news. And, mentally, it feels like Bitcoin is just really down this week. And it is. However, for perspective, when we began last week's show, the Bitcoin price had just popped from, the $25,000 range to, it popped to above $28,000 and before settling back into the lower $27,000 range. So basically, Bitcoin is just doing what Bitcoin does. And again, I remind you that if you look at where we are in terms of the last cycle in 2019, it looked a heck of a lot like this. The prices were different, but the price action was almost the same. They say history doesn't repeat, but it rhymes, and it is just uncanny how well, even the day of the drops or the day of the rises are lining up really, really close, almost like it was pre-programmed. So what I'm saying basically is zoom out. Of course, staring at the price charts on a minute-by-minute basis, Bitcoin is nauseatingly volatile. For example, just this afternoon, Bitcoin was humming along at about 25,600-ish. And for whatever reason, it had what looks like a dramatic drop all the way down to 25,394, followed in less than an hour by a huge spike all the way up to all the way up to $25,999. I know we're only talking about a $600 swing here, but in the crab market, that was a significant blip. It shows up on all the charts if you look at it. Moving $600 for Bitcoin is nothing, right? We're still talking about that $10,000 God candle one day, and it will happen. But in the meantime, that blip, it almost looks like an EKG, like a little heartbeat blip. And then Bitcoin trended back up, to above $25,700, where we are right now. The point being, if you were staring at the charts, you could go cross-eyed following the blips up and down. But if you just zoom out, more importantly, if you just stay humble and stack sats, as Matt Odell says, it's a smooth ride. In the big picture, we're still up and to the right. All that being said, unless the price pumps hard while I'm talking, or while I have been talking, we're going to add to our stack at the lowest US dollar price we've paid since March 15th, and that is awesome. We're not going to get quite 4,000 sats per cuck buck, but we're going to get a lot more than we have been accustomed to, and hopefully drop that dollar cost basis, that average cost basis down in the process. I mentioned in the intro that there was breaking news that will have major impact on Bitcoin adoption, possibly on the price as well. They kind of go hand in hand. Obviously, the more people that use Bitcoin, the less Bitcoin there is per capita, and that would tend to be a supply price driver, an increased driver. So Michael Saylor tweeted about 7 hours ago now that fair value accounting is coming to Bitcoin. This upgrade to FASB accounting rules eliminates a major impediment to corporate adoption of Bitcoin as a treasury asset. If you're not familiar with the corporate world or the accounting world, this is a big deal. The FASB is a U.S. account standard setting board, and basically, according to Bloomberg, they unanimously voted Wednesday to change the accounting rules for Bitcoin companies, or for companies that hold Bitcoin. Quote, under new rules expected to be published by year end, Companies that hold or invest in cryptocurrency will be required to report their holdings at fair value, a measurement that aims to capture the most up-to-date value of an asset, including rebounds in value after prices dip. While the new standard will inject volatility into the earnings of companies that are heavily invested in crypto, the ability to record recoveries will be an improvement over the current practice. Companies and accountants have told the Financial Accounting Standards Board for months. It continues, it is not often that we can both take cost out of the system and improve the decision usefulness of information, and it makes it a really easy vote to do both of these, FASB member Christine Botozen, sorry Christine, don't know how to pronounce your last name, said. For those of you not familiar with the FASB, the Financial Accounting Standards Board is a private standard-setting body whose primary purpose is to establish what has become known as the Generally Accepted Accounting Principles, or GAAP principles, for businesses in the United States. The SEC designated the FASB as the organization responsible for setting accounting standards for public companies in July of 1973. That replaced the American Institute of Certified Public Accountants Accounting Principles Board. Basically, what it means is what their recommended practices are the practices that companies have to follow, and their previous guidance was that if Bitcoin's price went down in value, you had to write it off as a loss. And it might have just been a flash crash, and Bitcoin could have since recovered, but until they sold that asset, they had to carry it on their balance sheet as if they'd lost a lot of money. So, for example, Michael Saylor's company, they own billions of dollars worth of Bitcoin, and when that value got cut in half, they had to basically file their reporting as if their company had lost billions of dollars. And of course they didn't, because Michael Saylor and MicroStrategy have never sold any Bitcoin. And when the price recovered, or even when the price goes on to set a new all-time high, they were stuck as reporting that loss until they sold their Bitcoin. Now, under the new rules, they'll be able to reflect the fair market value of Bitcoin. So instead of looking like they had a $2 billion loss, they can report what the fair value of their holdings are. And that is cool, because not only does that make it a lot easier for the businesses, it's also more fair for the investor, and it's more fair for the Bitcoin community, because the companies can be fairly valued instead of looking like they made a horrifically bad decision just because the price, temporarily dropped. Anyway, this is big news, but remember, the important news is you still have time to front run Wall Street, plebs. But like Indiana Jones trying to slide under that big rock door that's falling, trying to seal him in the tomb, that window is closing rapidly. And with things like the FASB changing the accounting rules to make it easier for big companies to hold Bitcoin on their balance sheet, with things like the halving coming up, TikTok next block, I don't have a crystal ball. I can't tell you how much longer you have to stack those sats. If this is just like the previous cycle, then, we have almost a year to stack sats, maybe not at 4,000 sats per dollar, but below the previous all-time high. Just like there's black swans, there's white swans or golden swans. This is a golden swan hiding in plain sight, because it won't take more than one or two big companies to follow Michael Saylor's lead, and we get corporate FOMO, and now all of a sudden, instead of you and me trying to scrounge up $20, $100 to stack some sats, we're talking billions. And, with that halving looming, there aren't billions of dollars of the Bitcoin out there necessarily for, Apple or whoever to snap up for their treasury. So what does that mean? It means that fewer Bitcoin are going to be stretched into that billions, which means the price of Bitcoin going through the roof, which means you and I will be able to stack less. Not financial advice. Do your own research. Just my humble opinion. But I am stacking as furiously as I can before that happens, because privately, I'm worried I'm not stacking hard enough or fast enough, even though I know I'm doing everything I can. You can only get so much, orange juice out of an orange, right? And you can't squeeze blood out of a stone. I'm stacking as hard as I can, but if you're not, I'm telling you, even if you are stacking as hard as you can, when the price goes through the roof and you look back, you're going to wish you had more Bitcoin. And if you don't have more Bitcoin because you didn't do everything you can, you are going to have to live with your future self. I mean, you're going to have worries and regrets that you didn't stack hard enough anyway, even if you are. If you're not, fair warning, you're going to have to account to your future self on why you did not. All right, and the news continues to get bullish, but before we talk about that, let's look at some of the FUD out there. Not even necessarily Bitcoin FUD, some just the gaslighting that's going on. I know we're basically in an election year. Obviously, the next presidential election isn't until 2024, but that's, less than a year away. November 2024 is coming up fast. I know we haven't had the presidential primaries yet. We don't even know who necessarily is going to be on the ballot. That doesn't matter. We're at the point in the United States where everything is politics. And if you are an incumbent, whether you're the president, a senator, a congressman, if the economy sucks, whether it's your fault or not, that makes it harder for you to get reelected. And so the spinmeisters are out there trying to sell us how this is the best economy in 50 years. Everything is roses, including when you're getting fired or when you're trying to go grocery shopping and groceries cost you twice as much as they used to. This nauseating article that was on finance, Yahoo Finance, is just a golden glittering example of the gaslighting that's going on. Yahoo Finance ran the article on the 3rd of September, so 3 days ago, saying the middle class is getting its spending power back, but progress is slow. A new household budget index from Primerica found the purchasing power of middle-income households increased in July. So despite the fact that people are losing their jobs, despite the fact your groceries are getting more expensive, despite the fact it costs more to fuel up your car, despite the fact if you're in Florida, for example, you can't afford your car insurance or insurance on your home, well, according to Yahoo Finance or Primerica, you're actually doing better than you think. You're doing better than you were last year. It's just BS. And speaking of the freaking gaslighting, Yahoo Finance had another whopper on September 1st when they ran the headline, "Unemployment reaches 18-month high for good reasons." The article goes on to say, "This was one of those good reasons increase," Jefferies U.S. economist Thomas Simmons wrote in a note on Friday. "Given the tightness in the labor market, more supply is welcome. And sometimes it takes a little while for new entrants to find a fit." So the labor market is so tight, the fact that there are people getting laid off is fantastic because finally employers will be able to find new employees, right? All you that just got laid off from whatever job you're working at, that's spectacular because McDonald's is hiring and they can't get enough kids to flip burgers. So that's just fantastic. It's just fucking disgusting. Pardon my French. Trying to keep that G rating on this podcast. And I've been doing really good up until this point. But these articles are just infuriatingly wrong. The gaslighting is just disgusting. It's reached epic proportions, even by this whole standard of gaslighting, even by the ridiculousness of gaslighting as a concept, as the whole concept of gaslighting is to just FUD you to with false information, just bury you in false information to the point where you start questioning your own sanity. And that's what it's like because, Yahoo Finance is telling you the economy is not only great, and not only that, if you got laid off this week, that's great for you too, because you're going to be able to find a job, even if it, quote, takes a little while to find a fit. Reminder, and I said this just on the last podcast, it was Mark Twain who said there are 3 types of lies: lies, damn lies, and government statistics, or statistics, I guess. And in this case, the jobless rate has been continuously revised downward. So even if the numbers seem good, even if you take it at face value that the unemployment numbers are great, I remind you that the previous unemployment numbers were just revised downward again. So like the March unemployment numbers, for example, have now been revised downward twice, maybe even 3 times. CNN.com ran the article, "Despite downward revision of 306,000 jobs, the U.S. labor market is booming." Basically, they said that America added 306,000 fewer jobs last year than we thought, but the labor market is still hot. The article says U.S. job growth during much of the past year was weaker than previously projected by a little more than 300,000 jobs, according to new federal data released Wednesday. As part of the agency's annual benchmark review of payroll data, the Bureau of Labor Statistics revised down March 2023's employment gains by 306,000 positions. Guys, I don't know if you pay attention to these statistics, but they've been coming out saying like the job market grew by 170,000 jobs this year or this month, or 180,000 jobs last month. and then they revise it downward by 306,000 jobs. Those are two totally different stories. You either added 100,000 jobs or you lost 200,000 jobs. Which is it? Because they're completely different. Job growth and dramatic job loss are not the same concept. And along the lines of lies, damn lies, and statistics, BLS, Bureau of Labor Statistics are the worst because they always come out with the rosiest numbers. And then a month later, or 2 months later, a year later, sometimes more than a year later, they revise and go, yeah, we had time to crunch the numbers. They were actually worse than we thought. But, that's ancient history. And no one's going to read that article anyway. And this is going to be my last negative article, guys. I promise. I super secret squirrel promise. The ridiculousness continues for those news organizations that are forecasting doom and gloom, that are saying the economy's bad. What's their culprit? Well, in this case, it's Taylor Swift and Beyonce. Taylor Swift and Beyonce they were being blamed for causing inflation, and now they're being blamed for the looming recession. Folks, they really do think you're that stupid. I think it was last podcast I was talking about Jeff Foxworthy when he mangled himself on the playground as a kid, and his mom came up to him and said, "Oh, you really are that stupid." Guys, that's the media. That's the financial press. That's the leading economist, Nobel Prize winning economist, mind you, telling you they think you're that stupid. Again, this humdinger comes from Yahoo Finance, and it says, "Why the Taylor Swift Beyonce Barbie wind down may hurt the U.S. economy. A combination of the Barbie movie plus Taylor Swift and Beyonce tours helped drive surprise growth in the U.S. economy this summer. In aggregate, the concerts and the blockbuster movie are expected to add $8.5 billion to U.S. growth in the current quarter, per Morgan Stanley. Good for more than a third of the growth in consumption the firm projects in the third quarter. But their wind down in the final quarter of the year could contribute to a personal consumption slowdown economists have been waiting for." So economists have been waiting for this recession, and it's going to come because you got done watching the Barbie movie and seeing Taylor Swift. I'm old enough to remember some fondly summer blockbusters, and there are a lot of them. I couldn't even name my favorite movie. And we did have a glut. We did have a drought of good movies. There were just a slew of really horrible movies for a while. And of course, the theaters being closed during The Thing, made, the blockbuster not even a thing for a while. But people go to the movies every summer and every holiday season and watch the latest blockbuster all the time. Having the Barbie movie or having Oppenheimer, or I'm surprised they didn't mention Top Gun Maverick, because that was the movie that was hailed as saving the movie theater. The great American revitalization of cinema, as they were touting it. But they didn't mention in this article. Maybe it's just because they want to say that this recession is going to be the girl power recession, right? It's all women's fault, I guess, because that's the majority of Taylor Swift, Beyonce, and Barbie's customers. It's BS. Is what it is, and it's a perfect example of them thinking, yes, you really are that stupid. Okay, I super sweet promised that I'd keep it positive from here, and I must have lied, because I also wanted to point out that Barchart on Twitter posted another interesting chart that I think belongs in what the WTF happened in 1971. And if it isn't already there, I'm sure it will be shortly, but it was basically a chart showing the cost of buying versus renting in the United States, and it hits its widest gap in history. And basically it's up and to the right. I mean, it's got some dips in it. It looks a lot like a chart of Bitcoin, just zooming up to the right eventually. But the one thing that you will notice if you look at that chart is that the two lines are touching in 1970, and they stay touching until 1974, and then they begin a dramatic divergence that only accelerated during the 2006 housing bubble and then went off the chart most recently in the last year or two. So they might be telling you this is the best economy in 40 years, but you know better. You've got to pay your mortgage, or you've got to pay your rent, and you've got to go to the grocery store, and you've got to buy insurance. And you're not crazy. It really is costing you more when you pay $200 for $50 of the groceries. You realize the state of the economy. The FUD rolls on, though, because not even talking about Bitcoin, It's the beginning of September, and the economists and the financial media are out there reminding you that September is traditionally a bad month for the stock market. So you expect stocks to go down. The economy should be bad in September. And then they roll out statistics that basically show it's a 50-50, that half of the time markets go up in September and half of the time they go down in September. But in general, 50-50 is all the time, right? In their logic. That is being used, that is being spun into FUD for Bitcoin, with AOL News reporting just 6 hours ago, September has been a bad month for Bitcoin. This year could be among the worst. So basically because of the correlation between September's and the stock market and Bitcoin, that everything's going to be horrible, and this could be the death knell. This will be the nail in the coffin in Bitcoin. Or if you're like you and me, hopefully we'll be able to stack sats more cheaply, because September is it's still before the halving, and it's exactly, going down in September, being crabbing September, going sideways in September, a little blip in September. All of that would basically just be sticking into that crab market thing that Bitcoin always does in the lead up to the next halving. Business Insider posted just this morning, Bitcoin set to form death cross as dollar index teases golden crossover. So the dollar is great, Bitcoin sucks. The economists have spoken. All right. And I'm not even going to get into the fact that masks and lockdowns and stuff are back in the news, because there is hope. People are fighting back. Almost every article you see about the variant, the things that they want to do because of the variant, are lamenting the fact that they don't think people are going to cooperate because they've had enough. One particular article, they were quoting the health director of one of the largest states in the Northeast United States, where a lot of the people are trying to move to Florida from, but shall remain nameless, saying that they would have already imposed these mandates, but they don't think people will follow them. And the reason why was, quote, everybody knows somebody who has had the thing and been just fine. And so they're less likely to be scared, basically. Folks, remember, it is always darkest before the dawn. We have a lifeboat, we have an exit hatch, we have a life ramp, we have an off ramp, and that off ramp is Bitcoin. We have people like Nayib Bukele turning El Salvador into that shining city on the hill, a golden beacon for other nations to follow, and he is about to become vindicated big time. It's hard to visualize, but clear your mind and picture that Bitcoin has had the halving, and it's 6 months later, and we're rallying, and we've eclipsed 69,000, and we've pumped past 100,000, and Bitcoin's on its way to the moon. And over in the corner is El Salvador, Nayib Bukele, and the Bitcoin standard. That's going to look pretty darn good, isn't it? People are going to be, people right now, they've been making fun of Nayib Bukele. They're fudding Nayib Bukele. The World Bank, Bank of International Settlements are trying to make, it look like Nayib Bukele was a laughingstock and he made a huge mistake. That narrative will be impossible to spin when Bitcoin sets a new all-time high. And in Argentina, we have Javier Milei, who's trying to overthrow the status quo in Argentina, to get rid of the Argentine peso and to get rid of the central bank. These are all good signs. There are people out there fighting the good fight. If that doesn't make you happy, though, this one makes me smile. Bitcoin price up 365,999% since economist Paul Krugman dissed it at $7. Yes, remember Paul Krugman, the one who said famously that by the year, I don't know, it's 2001 or whatever, or so, it will be obvious that the internet has had no greater impact on the economy than the fax machine. Yes, the nation's leading economist, the New York Times head economist, Nobel Prize-winning economist, Paul Krugman, who told us that the internet was not going to have any impact on the economy, that it was a passing fad, and who dissed Bitcoin as worthless at $7 a coin. So you get Bitcoin at the price you deserve when we're on a Bitcoin standard, and everyone needs Bitcoin whether they want it or not. People like Paul Krugman will have gotten in last, and that will be their just desserts. Okay, so that got really dark and really negative. Let's get on to happier thoughts. And the happier thoughts are, why are we here? And we are here because today is Wednesday, and every Wednesday is DCA Wednesday. If you are new to this podcast and don't know what the heck I'm talking about, DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals regardless of price. For example, this will be our 111th stack. So we chose our equal portion. We wanted to keep it simple. I wanted to demonstrate stacking in a manner that pretty much anybody, regardless of where you are, should be able to relate to. So we chose $20. Again, this is a you do you thing. Obviously Michael Saylor isn't out there DCAing $20 at a time. So if $20 is nothing to you, pick a number that's more appropriate for your circumstances. But for a lot of people, $20 is a lot of money. If you don't have any money to spare, any money is a lot of money. So just coming up with what it might cost to go to McDonald's or have a couple beers after work, it's what I wanted to set as our standard. And our regular interval, we chose weekly because most people get paid weekly and they therefore do their investing on a weekly basis or a bi-weekly basis or whatever, is appropriate for you. But we chose weekly just to keep it simple. And a bi-weekly podcast seemed a little, a bi-weekly podcast didn't seem like that was coming out. Like that would be enough frequency to keep your attention or to be even worth listening to, right? So, as I mentioned, this will be our 111th stack. We started stacking every Wednesday all the way back on July 28th, 2021. So far, we've stacked 110 times. We've stacked a total of $2,200 US, turning that into Bitcoin, including $49.05 worth of fees. So, obviously we stacked less than $2,200 of the Bitcoin, but our fees are part of that purchase price. So our cost basis includes those. So, that being said, that $2,200 has earned us a stack of 7,622,901 sats, and at an average price of $28,860.40. So a little bit underwater, but not too shabby when you look at Bitcoin in terms of its all-time high or where it will be one day if Bitcoin continues to go up and to the right. To add to that stack, as usual, I'm going to use the handy dandy Cash App. I absolutely love the Cash App. I use it to send money to my friends and family or to receive money from friends and family. Sometimes I use it to make purchases because I have a debit card associated with it. But primarily I use it to stack Bitcoin, and I do so because they will let me add money to Cash App immediately, purchase Bitcoin immediately, and transfer it to my hardware wallet immediately, which are things that most other apps won't let you do. They might let you buy Bitcoin immediately. But for example, Strike made me wait 4 days before I could send that Bitcoin when I was only buying it to make an online purchase. And Coinbase will make you wait till your money settles before you can purchase Bitcoin, or depending on what their current rules are. I think they changed it to where you could buy it, but you can't move it. Either way, Cash App will let you do all three. They are not a sponsor of the show. I like them. And so when we're making small investments like $20 at a time, that 45-cent fee we're going to pay to stack $20 is pretty negligible considering we don't have to pay a mining fee to transfer to my hardware wallet. If I were making a bigger purchase, I would probably use a service that didn't charge a fee, or at least as much of a fee. So again, that's a you do you situation. They're not a sponsor of the show. If you do not use Cash App and you want to use Cash App, however, there is a referral code in the show notes. And I believe the current offer is you'll get $5 free for signing up and using Cash App. And the podcast will get $5 as well. So you can help support the podcast without spending any of your own money. In fact, you can get paid to help support the podcast if you choose to use Cash App and click on that link to sign up. So I've got Cash App open. I'm adding $20. I've got a debit card link, so it's going to take it right out of my checking account. Dun dun. $20 is ready to go. So I'm tapping on Bitcoin, tapping buy. Entering $20, tapping confirm, and boom, just like that, we purchased another 75,972 sats. That is awesome. That is significantly more sats than we stacked last week when we only scored 71,000 sats for the same amount of money, or 4 weeks ago when we only scored 66,000 sats for the same amount of money. So while Bitcoin is down in terms of US dollar price, if you're on a Bitcoin standard, it means the number of sats are going up. And that is all that matters as far as I'm concerned when it comes to growing my stack. And that did grow our stack. It bumped our total stack up to 7,682,000 698,873 sats, which is phenomenal considering we did that at just $20 a week. You know, if Bitcoin goes to the moon one day, that stack, let's say Bitcoin hits $1 million, that stack would be worth $76,988.73. If you are sitting in the global south right now, if you're listening to me in Central America or South America or Africa, where $76,000 is a lot of money, imagine how that would change your life. That's certainly a heck of a return, considering we've only converted $2,200 into Bitcoin. Even if Bitcoin only hits 100,000 during the next cycle, that's still $7,698.87 worth of Bitcoin. I just saw today another story saying the average American has less than $1,000 saved towards retirement. This is 7x what the average American has in savings if Bitcoin hits just $100,000. And even if Bitcoin doesn't hit $100,000, you know, we still have double what the average American has in savings just by stashing $20 worth of sats a week. Perhaps as importantly, that dropped our average cost basis down by more than $25. So our average purchase price is now $28,835.39. That average cost basis had kind of remained flat over most of August because when we started stacking on August 2nd, before we stacked, our average cost basis was $28,860. And then it went up because the price of Bitcoin is on the rise. It went up by $8 one stack, 12 another stack, 6 another stack. And then it started going down as Bitcoin got cheaper again. And so for the previous two purchases, it dropped. But basically what I'm saying is that it went down to exactly where we started the month with an average cost basis of $28,860. This knocked it down to $28,835.39. Today's purchase did, that is. So that is cool. Again, it won't really matter if Bitcoin's worth $200,000 a coin or $1 million a coin, you know, what you purchase to that. The only bearing that'll have on anything is if you have to pay capital gains, you know, how much tax you owe. But, you know, that'll be the least of your concerns if Bitcoin eclipses $1 million one day. What really matters is how many sats per dollar we were able to stack. And today we were able to stack a heck of a lot more than we had been. All right. My apologies for keeping it a little bit of a negative episode. That, however, was not my fault. There was just so much FUD out there, and I tried to glean through it and only go over the stuff that really got my goat, as the saying goes. So, you know, during the crab market, during the bear markets, Bitcoin isn't often as fun, obviously, as the euphoric phase when everybody's shouting things like 200K by conference day and all the memes are coming out and all the great parody songs are coming out. And those days will come, as Adam Meister says, you know, on his One Bitcoin show, that Bitcoin always returns to its all-time high. Bitcoin always sets a new all-time high. You know, these 4-year cycles, even if you've been through several cycles, even if this isn't your first cycle, if it's your second cycle, third cycle, or you're just an OG, it's hard to look at the price of Bitcoin. It's hard to look at where we are in the cycle and stay optimistic sometimes. And that's just human nature. But like I said, it's always darkest before the dawn. And that dawn is approaching. Tick-tock, next block. As a friend of mine used to say, it's coming at you like a big dog with a wet nose. And, you know, whether that's 420 of 2024 or 42022 or 422 of 2024, regardless, it will be a block 840,000. And between now and then, we will stack as many sats as we can next Wednesday and every Wednesday on our DCA Wednesday episodes. And until that time, you sexy sat stackers, keep on stacking those sats.